Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going over our weekly numbers for week 36. This is as of today's date, March 29th, 2025. It's a Saturday. So as always, we go over our numbers. Let's get into it. So week 36, our current portfolio's net worth is at $460.73. And again, this is as of March 29th, 2025. We have our weekly data for week 36. This is from March 24th, 2025 to March 29th, 2025. We have no new net cash flow coming in. You can see this kind of volatility in the chart here of our portfolio. We have a money weighted rate of return of 0.63%. A market gain of $1.95, and a dividend earned of 52 cents. So we're starting to come back around with our portfolio, mainly because of gold and commodities. We'll be showing you that in the charts. But late February we had a horrible couple weeks, and now we're kind of like coming back around, which is good. We have our portfolio monthly data for week 36. This is as of February 28th, 2025 to February 29th, 2025. We have a net cash flow of $30.14. So you see this large spike up on the chart right here on March 12th. This is when we had our $30 cash deposit. We had a money weighted rate of return of 1.79%. We had a market gain of $7.42. And we had that same dividend earned of 52 cents over that time period. So having more positive data this month. So week 36, this is our monthly data. Then we have our quarterly data for week 36. This is as of December 30th, 2024 to March 29th, 2025. We went from $317.60 to $460.73 over that time period. We had a net cash flow of $123.44, which means we had 4 deposits of $30. So we have one right here, one right here, one right here, one right here. Every time you see a stair step up in the chart like that on the chart. Again, this is what I was talking about in February. This is still by far our worst couple weeks. There's a lot of volatility coming down, but now we're starting to come back up. Over that time period, we had a money weighted rate of return of 5.35%. We had a market gain of $19.69, and we had a dividend earned of 77 cents. So over that time period, we went from, again, $317.60 to $460.73. So a lot of that was cash, and then our market gain as well. So this is data for quarterly data for week 36. Then we have our all-time data, where we started at 0 on July 21st, 2024. So present day, March 29th, 2025. We had net cash flow of $434.61. So we have our initial cash deposit, which was $100 back on July 21st. And then every 3 weeks, we had a $30 deposit. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So that's an extra $330. In addition to our initial deposit of $100, which gives us $430. And the extra $4.61 is from extra cash and dividends. So over that time period, we have a money weighted rate of return of 10.82%. So we're back above 10%, back in the double digits, which is good. Again, this volatile week really screwed us up. We have a market gain of $26.12 and the dividend earned of $2.05. And it's the first time I've seen the dividend over $2. So this is our all-time data since beginning till today. And this is our weekly update for week 36. So now we have our weekly percentages. So on the right, we always have our target allocations. So at the top, we have gold at 30%, utilizing our GLD ETF. We have commodities at 20%, using the USCI ETF. We have the US dollar at 15%, using the UUP ETF. We have bonds at 15%, using the GOVI ETF. we have stocks at 15% using the equal weight RSP ETF. We have Bitcoin at 5% using the IBIT ETF. So gold this week up 2%, which is great in 1 week, up 2% for a market gain of $2.80. So gold's had a lovely little turnaround. I think it's back at all-time highs. We'll check that on charts, but I think it's back at all-time highs. We had commodities up 0.83% for a market gain of 76 cents. And we had the US dollar up 0.04% for a market gain of 3 pennies. We have our bonds down 0.25% for a market loss of 17 cents. And keep in mind, the GOVI ETF is fairly new. We switched it from GOVT, so we won't have as much long-term data on it yet, but we'll show what the performance is on the charts. Then we have our stocks at 0.69, down 0.69% for a market loss of 47 cents. And then we have our Bitcoin down 0.31% for market loss of 7 cents. And this is our weekly percentages for week number 36. And we got our monthly percentages. This is where you can really see gold shining. So gold up 7.92% in a month. So that's monthly data in a month for a market gain of $10.32. So over the month, gold up almost 8%. Big move in gold, big comeback in gold. The commodities up 4.14% for a market gain of $3.58. So commodities also doing good. So by far, these are the better two investments over the month. Our US dollar for the month down 3.63% for a market loss of $2.72. Our bond ETF down 0.77% for a market loss of 47 cents. Stocks down 3.94% for a market loss of $2.68. Stocks are still taking a hit. The tariff talk is killing the market right now. Bitcoin down 0.42% for a market loss of 9 cents. So this is our monthly data for week number 36. Pardon me. Now we have our quarterly percentages for week number 36. Gold still doing great, up 17.63% for a market gain of $19.69. Gold is doing great, making a comeback. Commodities up 8.87% for a market gain of $6.22. So commodities still doing good. USCI ETF doing great. Still don't quite see inflation coming down, a little bit coming down, but not a whole lot. But commodity prices are coming down a little bit, but it's not reflecting too much in this broad index of commodities that this ETF tracks. US dollar down 3.24% for a market loss of $3.42. The dollar is still coming down over the quarter. Bonds, so this one we will not have a full 3 months worth of data, so this number will not be accurate. But for the brief time that we've had it, it's up 1.50% for a market gain of 83 cents. RSP, our stocks ETF, down 2.82% for a market loss of $1.67. And Bitcoin down 12.64% for a market gain of $2.53. It's really only that pump that came a month or two ago that was up, and now it's coming down. So Bitcoin not doing good over the months and quarters. Now we have our all-time data, where gold up 30.19% for a market gain of $22.50. So great over this time. 30% is great. Commodities up 17.79% for a market gain of $7.45. Dollar down 5.04% for a market loss of $2.52. Bonds, same as the quarterly number, because again, we do not have a we don't have a long enough history of this ETF tracking in our portfolio. So I'll show you on the chart what the performance is. Stocks down 5.06% for a market loss of $1.93. So not doing good over all this time. Not doing good. And then Bitcoin up 29.26% for a market gain of $3.21. See, Bitcoin's doing so bad that it's made less money than gold now over that same time period. Think about how slow gold moves in terms of price and how fast Bitcoin moves. As quickly as it gains, it also gives up everything it's increased, and then it's decreased. So Bitcoin not doing great. We have our position changes. So this is as of the portfolio's inception on 7/21/2024. This is every time I've made a change, whether increasing or decreasing a position in my portfolio. And I usually move about 5% back and forth. Our most recent one was on March 10th, 2025, when I decreased my US dollar position and I increased my bond position. So I sold some UUP and I bought some GOVI. So that's the most recent one. But this is all the times that I've made position changes in my portfolio. And we have no new transactions this week. And then we have our Illuvium staking for week 36. So currently the ILV price is at $13.36, so still very low. Of course, the whole market is down, so it's not surprising. I have a new stake, so our ILV staking is up to 12.34 ILV tokens for a market value of $164.83. So that is a couple new tokens. You'll see that right now. We have our Illuvium vesting for week 36. So these are all my older vesting schedules. So the most recent one is going to come out in 4 months. So it's going to be in July. So it was staked on July 2024. Then we have August 24, November 24, October 24. I'm sorry, August, October, November, December 2024. And then we have January. And this was supposed to be February, but I had an issue with staking, so I did it a little bit into March. And I did this one right at the end of March. This is the most recent one. So I bought some ILV. I staked 2.9 ILV because it was I bought $40 worth each time, as I always do. And it was at about that $13 mark. So I got almost 3 ILV in one $40 purchase, which is pretty good. And it will unlock in 364 days. So this is the most recent, as of today, this is the most recent stake. I'm trying to do it like once a month, $40, just dollar cost average into it. Then I have my Illuvium revenue distribution for week 36. Currently we have our 3 payments that equal 0.024 ILV for market gain of 32 cents. We have no new revenue distribution. So the game's still long ways to go. Got a lot of waiting. A lot of these crypto games, I made a lot of big promises in the beginning, but still waiting. And then as I mentioned, we have staked some new tokens. So I have a Illuvium transaction for week 36. So on March 29th at 8:50 a.m., which was today, I bought 2.955 ILV, and then I staked it 2.9. I staked 2.9 ILV on the Illuvium staking. So right here, 2.9. So that's what that is right there. So this is my transaction for that. So I bought $39.55 worth. $40 worth, but plus, I got to pay a fee for a transaction, and then I staked it. So that's the new Illuvium transaction for the staking. And that is it for the weekly numbers. So now, if I find my mouse, there we go. We can go to our charts. So as always, we start with gold, our best asset always, right at the top of the trend line, doing great. Right at the top of the trend line, right around here. Look at that. Gold's at all-time high. Let's see what the price is on it right now. So gold's at $30.84. Look at that. Just shy of its all-time high. Looks like it hit like 388. Let's see. Yeah, it's like right there, or 386. We'll call it 386. So just shy of its new all-time high, 386. Crazy. Gold's still doing great. That's why we keep it at 30%. We've had it at 30% this whole time. The whole world's buying gold. I don't know why. But if you go back to October 23, really, if you go back to November of 22, it was basically a flatlining for here. It's kind of going sideways, up and up, and then it hit this little uptrend, and then it really hit this uptrend, right? So like September of 23, it really started going up, right? So that's why I show pretty much just that trend line. Oh, stuck. There we go. Oh, my computer's acting slow today. There we go. Or maybe it's trading view. But anyway, so this is going back September 23, October 23. And just trends just up and to the right, and we're still at all-time high. So that's why I keep it at gold at 3%. It's doing fucking great. Look at this trend. Nothing in my portfolio has a trend like this. The closest one is commodities, and it's also a good trend. But this trend's pretty clean. It's very consistent. It's very consistent. It's the most clean, consolidated trend going, for over a year and a half. It's fucking great trend. we're not selling gold. Now commodities, I don't know how commodities are still going up. Look at it on a 5-year, going back to the beginning of the pandemic when they started all the money printing, and this shit has been up and to the right. It became volatile December of 2021, and then kind of came back, and then it kind of came in this more consolidated trend, and then it broke out of the trend. So it broke out of this trend here in January 2025. So still just more volatility in commodities, which is crazy. I keep thinking it's going to come back to this trend, but it just, because it came down right here from February, was this February 20th? Coming to February 28th. This is where like a lot of the volatility was too in our stocks. But it came back, it bounced back, and it's already coming back up. Now maybe this is in anticipation of tariffs, because things are just going to be more expensive. I think steel's going to be tariffed. I know automakers are going to be tariffed. So just more commodity prices probably going up and causing inflation. So for right now, I'm keeping it at 20%. I don't know if I'm going to increase to 25. I think I like where my portfolio is at right now. But commodities are doing good. And then bonds, or GOVI, you see it's doing pretty good. Take a drink right here. So we had this low in January 14th, and it's been coming up. Kind of came sideways from March 3rd to March 21st, and it came down, but then there's a nice green counter right here, pop back up. Of course, you look at bonds on a 5-year chart, since the beginning of the pandemic, again, since all that money printing, bonds are coming down. But hopefully rates are starting to come down now. If we look at the 10-year yield, where are we at? We're at 4.25. So it's been going up in this trend, but kind of since this peak right here, October of 23, pardon me, put an arrow on this. It's kind of been going like this. So it's kind of had this peak right here, and then it hasn't really gotten back above it. It's been kind of slowly trending down. So I hope it goes down. Then my bond position go up, we can switch, because that'll also affect all rates, like mortgage rates and everything like that. But yeah, right now it's I don't know if it's calling it a reversal, because it's still within this large trend channel that I've made. But bonds for sure, hopefully making a turnaround. If they do make a turnaround, like I said, usually inflation would be going down, which means that interest rates would be going down, and then bonds could have a reversal and go up. So that's when I would be more into bonds. But right now we're keeping it at 15%. In US dollar, this horrible fucking position I have. Let's look at the DXY because it's cleaner. So we had this, I don't know if I should put this on the inside like this. It's a little better maybe. So we were up, and I'll make this like this. There you go. So we went up from September of 2024, and we hit this peak of January 25, and then we've come down, we've dropped down sharply, and then we're kind of coming back up right here. I don't know if tariffs are priced into this or how they're going to affect it. But since it's been coming down, I had that transaction where I reduced it basically. So I had my UUP, I reduced it by 5%, increased bonds by 5%. Because this trend was coming down. So I was like, it came down so much so fast. I was like, oh my God. So dollar's still not looking good. I think I'm still going to keep it at 15% because, like I said, the volatility of everything right now, really, because we don't know what's going to happen with tariffs. We don't know I'm talking U.S. tariffs. I don't even know what's going to happen with other countries tariffing us back. So there's our tariffs against other countries, and then there's retaliatory tariffs of other countries against us. So there's going to be like a lot of volatility. So we're going to see what happens. But as of right now, I'm holding my U.S. dollar at 15%. Stocks have broke their trend, and so far, so this goes back to September 2022. So far, they haven't really made much of a comeback. So this is our equal weight RSP ETF. We had a peak. Oh yeah, sleep well last night. We had our peak in November 2024. Came down in December 2024. And then kind of went sideways and then came down and broke again. If we look at our S&P 500, same trend. It came down and it hasn't come back up into this trend. So far back here, it's almost mirroring this trend right here, back in October of 23, where it came down, bounced up, just like it did here, bounced up, hit the trend, then came down again, which may or may not happen because, tariffs are going to be announced like next week. I think on April 2nd. So we're going to see what happens. But as of right now, like the stock market, the S&P 500 is breaking these trend lines. Right? Doesn't mean anything. They could easily reverse. Who knows? But as of right now, they're breaking this trend line. So I don't know what's going to happen. I still have stocks at 15%. Maybe if it really starts coming down, I'm going to have to reduce it and maybe put that 5%, take out 5% on it, reducing it to 10%, and maybe put that 5% into commodities, because maybe gold, fuck it. Maybe I just might actually raise something to 35% because it's just so volatile right now. But like putting more into gold when it's like at all-time high is crazy. I'd rather put it into commodities because I think there's still potential for commodities. I could be wrong though. Maybe inflation is coming down and the commodities will start coming down too. But as of right now, stocks are not looking good. And of course, Bitcoin. Of course, if stocks aren't looking good, Bitcoin's not looking good. So, hit its peak back in December of 24, came down, came back up, January of 25, and then just been coming down ever since. Go to our Bitcoin trend. Like I said, pretty much we hit that 100,000. And, it's just been coming down. Hasn't really recovered since. And every week I will show this because this so far this trend hasn't broken. So we had our peak in 2017, 2 peaks during 2021, and then 1 peak or 2 peaks one at the end of 2024 and the beginning of 2025. So a very short time in between each other, and it just dropped down. So Bitcoin just has yet to kind of break this long-term trend. I don't know with this right here. There needs to be this needs to happen, right? This trend needs to happen because this is a huge sell-off. But even then, this trend just barely came back up to hit the beginning of 2021 crash, and it came back up to the end of 2021, hit it again, that came down. So even if it does come back up, it might hit this line that come back down. But I mean, like if you're looking at stocks, I mean, like if stocks aren't going up, I don't think Bitcoin's going up. Stocks and equities and crypto in general just kind of seem to trade together. But right now, it doesn't seem good for Bitcoin. So we're just going to continue to see what happens. But I think next week is going to be the more interesting week to watch because, like I said, hopefully we'll get clarity on tariffs. I know the first few times Trump talked about tariffs, he put them on, then took them off, put them on, took them off kind of thing, like back and forth. Or more like he said he was going to do it, but then pulled back. But now it seems like maybe this is the real time, like it's really going to happen. And it's going to be a big impact, especially to the auto industry. So if you're looking to purchase a car in the future and these tariffs do go on and they do stick, you're probably 2026 models, maybe 2027 models of cars are going to be more expensive, just because of tariffs. So maybe the used car market would be a better opportunity for people. I don't know. But like I said, we're going to find out next week. So this week's maybe a little more muted, but next week it's going to be the interesting week to watch. So as always, thank you for watching the updates. Do this every week. Make sure that people can follow along the portfolio, show you my timestamps, everything like that, show you the performance. As always, if you have any questions, comments, or criticisms, let me know. Have a good day.